Hello, everyone, and welcome back to Daily Dollars. Recently, the United States House of Representatives passed a major piece of legislation called the Big Beautiful Bill, championed by President Donald Trump. This sweeping tax plan is making headlines across the country with bold promises and complex details. But one question is on everyone's mind: does this bill finally end taxes on Social Security benefits? In the next few minutes, we'll unpack what this bill means, what it includes, what it leaves out, and how it could affect you as a Social Security recipient or taxpayer. Whether you're a retiree already receiving Social Security benefits, a senior planning for the future, or someone focused on building long-term financial security, today's topic is one you won't want to miss. But before we jump in, do me a quick favor. Hit that like button and subscribe to Daily Dollars so you never miss an important Social Security update. All right, let's dive into the details. One of the most high-profile campaign promises made by President Trump was to eliminate federal income taxes on Social Security benefits. For millions of seniors relying on these benefits as a critical source of income, this pledge represented a potential game-changer, a chance to ease the financial burden, reduce out-of-pocket expenses, and preserve more of their hard-earned retirement savings. This promise struck a chord with older Americans across the political spectrum, especially those who feel that their contributions to the Social Security system should not be taxed a second time. However, despite the initial optimism, the current version of the Big Beautiful Bill does not eliminate taxes on Social Security benefits. According to multiple legal experts and policy analysts, as well as credible news outlets such as The Hill, changes to Social Security taxation cannot be accomplished through the budget reconciliation process that this bill used. This legislative tool, often utilized for advancing tax and spending measures, has strict limitations. It's not designed to make changes to long-standing entitlement programs like Social Security and Medicare. Simply put, Social Security taxation remains governed by existing law, and this bill leaves that framework intact. There are no provisions in this legislation that alter the tax formula or thresholds currently applied to retirement income. To better understand what this means, it helps to review how Social Security benefits are taxed under current rules. If you are an individual with a combined income, which includes half of your Social Security benefits plus any additional taxable income such as wages, pensions, dividends, or retirement account withdrawals, exceeding $25,000, you may owe federal income tax on a portion of your benefits. For married couples filing jointly, this threshold rises to $32,000. These income thresholds haven't been adjusted for inflation in decades, which means more retirees are taxed each year as their overall income increases. The portion of benefits subject to tax can range from 50% to 85%, depending on total income levels. This system, in place since the 1980s, has been a source of ongoing frustration for many retirees who feel they are being penalized for managing to save or earn a modest income during retirement. Many argue it's unfair to tax Social Security benefits at all, especially since they were funded through payroll taxes during one's working years. While the bill does not fulfill the promise of eliminating Social Security taxes, it does introduce a noteworthy provision aimed at providing targeted tax relief for seniors. The legislation proposes an enhanced standard deduction for taxpayers aged 65 and older. Particularly, eligible individuals earning less than $75,000 per year or married couples earning less than $150,000 would receive an additional $4,000 deduction on their taxable income. For those with higher incomes, a reduced deduction would apply based on a sliding scale, phasing out gradually to avoid a sudden cutoff. This deduction is designed to offer seniors some financial breathing room by lowering their taxable income and potentially reducing their total tax liability. For retirees living on fixed incomes, even small tax reductions can free up resources for healthcare, housing, food, and emergency expenses. It is important to note, however, that this enhanced deduction is temporary, with a sunset date set for 2028, assuming the bill passes in its current form. Unless Congress votes to renew or extend the deduction, it would expire after just a few years, potentially leaving seniors in limbo once again. While this measure represents a step toward easing taxes for older Americans, some tax policy experts have raised concerns. Critics argue that it conflicts with the principle of equal treatment under the tax code, as it gives preferential treatment based on age. The Nonpartisan Tax Foundation, among others, has expressed such concerns, noting that this type of tax relief might introduce new complexities and unintended inequities in the broader tax system. To put these numbers in perspective, consider recent data from the Social Security Administration as of December 2023. For example, over 330,000 residents in New Hampshire receive Social Security benefits, while Maine counts about 370,000 beneficiaries. Across the nation, more than 66 million Americans rely on Social Security, including retirees, disabled individuals, widows, and children of deceased workers. With Big, Beautiful Bill's current structure, none of these recipients will see changes in how their Social Security benefits are taxed. However, seniors who qualify under the new deductions income and age limits might experience some relief when filing their taxes, providing a modest but meaningful financial cushion. While it may not seem like a sweeping reform, this deduction could be the difference between financial stability and financial stress for many lower and middle-income retirees. Beyond the impact on seniors, the Big, Beautiful Bill contains a wide range of provisions that reflect President Trump's broader policy agenda. One of the notable changes is the elimination of federal taxes on tips and overtime wages, which could benefit millions of hourly workers and those in the service industry across the country. Additionally, the bill includes expanded child tax credits aimed at helping families, tax deductions for the purchase of American-made vehicles, enhanced border security funding, pay raises for immigration enforcement officers, and even a proposal to create Trump savings accounts for newborns. These provisions are designed to appeal to a broad base of voters, from seniors and families to workers and business owners. These additions signal an attempt to reshape the tax code in a way that aligns with conservative economic principles, lower taxes, incentives for American industry, and support for working families. However, like any major legislative proposal, the bill faces significant scrutiny and debate. After passing the House, the bill now moves to the Senate, where it will likely undergo further review and negotiation. Senators from both parties are expected to debate the bill's provisions, costs, and long-term consequences. The Senate's version may include revisions or compromises to address the concerns raised by various interest groups and lawmakers. It's important to recognize that this legislative process is fluid and complex. The final version of the bill that ultimately reaches the president's desk may differ significantly from the current House-passed text. This means taxpayers and Social Security recipients should stay informed and prepared for possible changes, especially as 2025 continues to unfold with many political and economic uncertainties. So, what does all this mean for Social Security recipients watching these developments unfold? First and foremost, the promise to eliminate taxes on Social Security benefits remains unfulfilled for now. Social Security income continues to be subject to taxation based on existing laws. That being said, the introduction of the enhanced deduction for seniors provides a measure of targeted relief for those who meet the income and age requirements. While this won't transform the tax landscape for all retirees, it could offer some financial breathing room for many. We value your opinions and comments, so please share your thoughts below. If you found this detailed overview helpful, please take a moment to like this video, subscribe to Daily Dollars, and hit the notification bell. Thanks for watching Daily Dollars. I'll see you in the next video.